welcome. Today I'm going to teach you guys how to trade and how to pick good entries on what we call the flip zones. So we usually go with the flow of the market. For instance, we've seen this on a bigger time frame. We know that okay, market is making what? It's actually in a downtrend, right? This tells us market is in a downtrend, making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, right? It gives us the idea that market is in a downtrend, right? So we are looking for sell opportunities. Let me go to the 1 hour. On the 1 hour, we scale closer just to see where is the best area to get a trade, okay, for a sell. So with this immediate one, we've seen that market, this is a high, this is a low, lower high, lower low, lower high, lower low, lower high, lower low. We're expecting price to get into a region somewhere here to give us a continuation down, okay? So I pick my Fibonacci, I pick my Fibonacci retracement tool, and I'm looking to get some form of retracement into these regions. These are my Fibonacci levels: 0.62, 0.7, and 0.79. This is by experience what happens. There are a lot of things that happen there most of the time. It keeps happening over and over. All right. So I just mark them down. Now, what are flip zones? Flip zones gives us, if we say flip zones, what do we mean by a flip zone? A flip zone is where demand was flipped to supply, or where supply was flipped to demand. Some people call these areas a break of structure, right? So break of structure in the sense that price came, made a high, made an internal low, internal higher high, internal higher low, couldn't continue to make a higher high, but rather broke this structure. So we call this a BOS, break of structure, okay? But it's also known as a flip zone because this was a demand zone. Price could have come here, entered here, and gone back up, right? This is how we plot it. So this is like our order block that could have taken price to a higher level if this internal structure was to dominate, all right? But since price has broken, it tells us the sellers are not done. There's still a lot of selling pressure in the market. Okay. Now, how do we get an opportunity? Drawing of flip zones is very, very important. How you draw your flip zone is very important. Okay. Typically, we are expecting price to get into these regions. Once price gets into these regions, per our Fibonacci, we know we are looking for a reversal pattern. That's one. On the extreme, we know that price can also get to this level on the extreme, to this level, because this is a QML level. For those of you who don't know what QML is, I think we would have to use another video to explain what a QML setup is. But for QML, we have a high, a low, a higher high, and a lower low, for meaning that when next time price gets into the previous high, we get an entry. So this is how QML setups look like, where price makes a high, makes a low, makes a higher high than the previous high, makes a lower low than the previous low. Then next time price gets into the line of the first high, we get an entry. So that's what has shown itself here. So high, low, higher high, lower low. Next time price gets here, we're looking to sell. But before price gets to that point, it could also reverse here. And these are some of the things that happen sometimes, and we don't understand why price on its way into our order block just stops on the way and just reverses because there's something here, and it just reverses and goes, and we lose the trade. All right, we lose the trade. So I'm trying to show you how to get those kind of entries, right? So flip zones, we get back to flip zones. We have to know how to draw our flip zones. Flip zones are drawn in a very simple way. You need to look for body wick lows. So the internal lows, I think, let me go to a lower time frame so we get it clearer. Okay, so something like this. This is our Fibonacci zone. We know that this area is solid. We are looking at something also here. Something here that we are seeing. There's something here. What we see here is what? Imbalance. There's imbalance here. Fair value gap, right? Fair value gap around this line. Meaning there's something here that price would love to come in clear. So most of the times when I get a level like this and I see my fair value gap, I just mark the 50% of it. Just mark it down. And if you realize it falls in line with the Fibonacci levels from 62, let's see, yeah, 62, 70, 0.7 and 0.79. So these levels confluence. Okay, this is serious confluence right here. Now let's draw our flip zones. To draw our flip zones, we are looking at the levels that were broken by the structure. Okay, the structure that was broken, we need to go down, see where price broke. So here we pick our zone from the body to the wick. Body to the wick. So the body to the wick of the low, the low that went up. So here we pick the body, from the body to the wick, we extend it. So this is like a triple confluence that we are seeing here. Third one, we have this one doesn't have a body to wick, so we leave it. So we come here, body to wick. All right, so very good. So this is what I'm seeing. This is exactly what I'm seeing. So it tells us that even before price gets to here, it can react here. It can react here. It can react here. It can totally ignore all this and go and react to this QML setup that we predicted at first. So that one would also have our entry around somewhere here. Yes, because that also aligns with previous resistance. All right. So that's it. Let me take off this one. And you've seen that everything is aligning. Everything's aligning. So this imbalance, 50% of the imbalance has aligned. So I'm picking it off. So there's a reason why we have this here. So these are flip zone, flip zone, flip zone. That is going on and on. This is also a flip zone, but just that this one price has already come there and it didn't even do anything, you know. It broke, came there, it just gave us a small rejection here, you know. And if price gets into the region, we are looking for a reversal pattern, candle pattern. So the candle patterns we always look out for are the engulfing patterns. We look for either an engulfing pattern. In this case, a bearish engulfing, because we are looking for sells, right? In this case, we're looking for a bearish engulfing. So this should have been a black one. This would be a blue, giving us buy and sell engulfing. If we don't get that, we don't enter the trade. It's either that or an evening star or morning star. So we're looking for candle patterns. So what we need to do is wait for price to get into the region. All right, let's see. I don't want this video to be too long, so that's why I'm speaking a bit faster. Okay, price got here. It gave us what? Doji and a candle. Once it closes bearish like this, we enter. Okay, we enter for the trade. We put our stop above the zone, and we are targeting the low. So okay, we're targeting the lowest low. All right, so this is our first entry. We wait to see what price did. Price came, it looks like it came to hit our stop loss. It hit our stop loss, so it means we lost this trade. So we have to delete this level, clear this level. Mind you, we've marked alarms here waiting. So once the alarm hits, we are waiting to see what price is going to do. So let's continue. We wait and see what is price doing. Where is price going from here? Price is going up. Sorry, hit this thing to the wick. Very good. So look at this. As price got here, it gave us another engulfing. What do? We wait for that engulfing to be done. Once it closes, you enter the trade. You enter the trade and you put your stops above the zone, still with the same target, right? All right, let's see what happens. Price kept going up. It went deeper into the zone, gave us another engulfing candle that I think also closed very good, also closed bearish. What do? We add a second position with the same stop loss at the same region, take profit at the same level. All right. Mind you, this is a chart that I'm actually in. This is a trade I'm currently in right now. I'm currently in this trade right now, and it's looking quite good. Okay. So look at what price does. Price just kept going down, kept going down, kept going down. Started breaking structure, and this is the move we've been looking for. This is the move we've been waiting for. It keeps going down. So price is currently here. So what I'm saying is, you don't always get price to get to move into your order block, the very obvious order block on the H1 or the maybe the M15, the clear zones that we are waiting for. Sometimes price is going and it just stops on the way, and we get confused as to why price is doing that. You know, it's just because there are some flip zones that are working in the background. See how accurate this thing was. Give us an engulfing, first entry, second entry. Now both of them are in profit. Look at that. Okay, so that's another way to trade on any setup actually. All right. And one thing is, with this, you make sure you break even. Once it's broken this level, you update your stops. You just update your stops, get your stops a bit closer, and trail your stops down. All right. Look at this. We are still going down. We're still going down. Price is going down. Price is going down. So once it breaks this level, we are looking to update our stops. Okay. So we update our stops. Update our stops. Update our stops. We've broken even, and we are good to go. We are good to go. All right. Thank you very much, guys. I'll see you in the next video.